Hello, everyone. Thank you so much for being here with us today. My name is Jeffrey Wu. I am a certified financial planner, and my pronouns are he, him. Today's webinar is the fourth webinar out of the series of 6. And Julian, can you go to the next slide? Today we'll be talking about the get financially ready to buy your first home. So you probably already watched one or two webinars from before, but everything is recorded. Everything is recorded bilingual, like in English and French. So if there's any topic that you want to watch or rewatch, please go on QueerTech's website or go on the YouTube channel to watch them. Sorry, just wait a little bit. The reason we built this financial series, one of the reasons is that there are a lot of studies showing that no matter what is your income level, your financial well-being, which in turn goes to your overall well-being, is largely determined by your confidence in managing your finances. And the goal of these 6 webinars is really to give you a solid foundation of how to think about financial planning in general. And on top of that, for the LGBTQ2+ community, we know firsthand that even though the society is progressing, it's still very stressful in many cases to work with a professional, to be authentic about it, and to get the right advice, which in turn really creates barriers for the community members. So what Julian and I are trying to do here is really to create a safe space, and so feel free to have conversations with us afterwards as well. We are really here to help you. Okay, so today we have a special guest. So Mr. Puzhen Cui is here. He's a chartered real estate broker. He's fully trilingual in English, French, and Mandarin. So he's a strong ally to the community as well. And because we're talking about first home purchase, we think it can be value adding to bring in another professional to talk a little bit about the real estate market, and also there's like pros and cons of 5% down payment and the interest hikes implications to you. So before we dive into today's content, I do want to recap a little bit of what we have talked about and how is it tied to today's webinar. So the first webinar, we focused on the fundamentals of a financial plan. Like basically it's about building a good base for your finances, and how and when do you seek help for that. The second webinar is about investment fundamentals. We talk about invest smartly and wisely, and we also talk about responsible investments. So it not only is about returns, but also about your values. And the third webinar was about protecting for the unexpected. So it's a lot about risk management and insurance planning. So all 3 topics are actually very tied to today's content, and that's actually a flow of our presentation today as well. So as financial planners, we often ask in the first meeting, when meeting with a client that what are your immediate, medium, and long-term goals? And our job is to help you to get there. And a lot of time, I would say like 9 out of 10 times when we're talking about short-term, medium-term goals, especially with young professionals, buying your first home is always, it keeps coming up. And that's why we decided to dedicate today's webinar to this topic. And buying your first home is probably one of the biggest financial decisions you're gonna make in your life, partly because it has an immediate effect that you need to pay the down payment, and it probably will deplete a large portion of your savings. But also it has a long-term effect as well, because you need to incorporate your budget. You need to, the cash flow will change because of the mortgage repayments and all the related expenses. That's why you probably want to be smart about this. And today we will dive it down, like dissect it into step-by-step thinking for you to really understand the process, and you can make informed decisions. Yeah, just a quick disclaimer. So everything here is just for general information purpose. Like if you want to get specific advice, go to your advisor or talk to us, and we can give you specific advice based on your situation. Okay, so the first part of the presentation, we'll be talking about what are the financial considerations before you purchase the home. Because once you make an offer, everything will move pretty fast. So it's very, very important for you to think through before you make any decisions. And the first question that you probably should ask yourself is that how much money you need to save before buying the property. A lot of times I think like when we talk to clients, they think that, oh, my goal is to save enough to pay for a down payment, no matter what percentage you decided to pay. However, it's actually like more than that. Like you definitely should save more than the down payment itself, and we'll tell you like what are the how to think about it. So we are giving an example of like a 600,000 market value property for this as an example. Puzhen later will talk about the specifics of the pros and cons for paying different percentage. But let's say like you pay, like we usually recommend clients to pay 20% if you can, because you don't need to pay the CMHC mortgage loan insurance, and also there is less liability overall over time. So 20% of 600,000 is 120,000. It means that you in your bank account, no matter if it's savings, checkings, RRSP, together like RRSP meaning the first 35,000 for the home purchase. Together, you need to at least have the 120,000 in your account. You can pay less depending on your income, but there are implications to it. But let's say that you need 30 to 120,000 for down payment part that you need immediately when you purchase the property. On top of that, a lot of people don't realize like there are many other expenses associated with it as well. Like the second layer of expenses are taxes and legal expenses. So there are several categories. Let's say home inspection, usually like 500. Actually, it's probably more expensive now. Like Puzhen can correct me because there's a very shortage of home inspectors in general. There is the welcome tax, like a land transfer tax specific to Quebec. So for 600,000 market value property, depending on where you are purchasing the property, geographically speaking, in Quebec, you need to pay 7,500 to 8,000 lump sum very quick shortly after you purchase the property. You also need to pay the notary fee, which will happen like at the transaction. So it's 1,000 to 2,500 approximately. I think right now it's closer to the 2,000, 2,500 range, also because notaries are really in demand. So that's the fee. It's probably shared. It depends on the situation. It can be the buyer paying for it, seller paying for it, but you need to consider that. And also adjustment for property taxes and condo fees depending on when do you buy it, and also sales tax if you're buying a new construction. So all these expenses you need to take into consideration because they are immediate expenses. They're not something that you pay over time. But just give you a little advice. Personally, I've been through this process more than once. It's important for you to also negotiate with your mortgage specialist or the bank. Sometimes they do provide incentives to help you cover the home inspection and part of the notary fee. And sometimes they have other promotions too. So it's not just about shopping around for the best rate. There are also other kinds of monetary incentives that can help you to close the deal. So always shop around for the mortgage side as well. Okay. On top of that, there are also the expenses associated with buying a new home. If you're moving from another place, you probably need to pay the movers. You may need to do renovations, repairs. Most likely, you need to buy new furniture and sometimes appliances. So this completely depends on your lifestyle. It can vary a lot by person, but I would say that at least budget for thousands of dollars or over 10K, depending on the situation. But this is something immediately needed as well, because once you move in, most likely you want to get this done immediately. So it needs to be added on top of the expenses. So that being said, there's a lot of misinformation about how much money you need prior to the transaction. And our word of advice here is always budget a bit more, not only for the 3 categories we mentioned earlier, which already can probably like drastically change your budget in mind. But also, like if you recall in the first webinar we did, we talked about the importance of having emergency fund and accessible cash. So anything can happen. Like let's say there's some major repair you need to do that you never considered, or there are some life circumstances that need you to spend some money on. You should at least have 6 months of your monthly cash flow saved in your account, and that is on top of the home purchase. This way you can have a peace of mind. Otherwise, like if something happened, you want to have the cash flow for whatever that can happen. So these are just some numbers like based on the example we give, but hopefully it can give you an idea of like what is needed before purchasing. And after buying, you need to get ready for your monthly expenses, the new monthly expenses. This is actually something, even though it says after purchase, I strongly recommend you to get thought through this before you make the purchase. And your real estate broker should be able to advise you on this amount listed on this slide, because they are public information. If you're in Quebec, you can get them on Centris easily, and you should have a budget before purchasing, so you know that you know that you can afford it. And also you should do different scenarios. Let's say if the interest rate goes up, if the condo fee goes up, right? Those are important scenarios to think through. That being said, being a homeowner doesn't mean that you will spend less. A lot of people think that, oh, it will be less than my rent, but not necessarily, because there are many different kinds of expenses ongoing. Mortgage payment, this is usually the biggest chunk. It's heavily depending on the interest rate. Puzhen will later show you the interest rate, the implication here. Condo fee, very important. Different condo associations, like different condos have very different condo fee structure. Get the information before. Also take into consideration that condo fee tend to increase over time. So just try to plan ahead as well. Utility, property taxes, home insurance, all those information the previous owner should be able to tell you. The repairs, renovations, and maintenance, just to budget a little bit, just because it can happen in time. Okay. So throughout this process, you probably need many advisors to help you. Some are legally required, some are not, some are nice to have. But for what we are talking about is more like, for example, Julian and I, we act as an insurance and investment advisor and also the financial planner. Puzhen here can talk about the real estate part, but you also need a good mortgage advisor or broker. You need to get home insurance, you need notary and accountant. We have a network of professionals we can work with, but it's very important for you to find someone that you can trust to advise you in this process. But speaking of which, I think I'm going to pass the stage to Puzhen, because like he is the expert more on the real estate side. And I think there are a lot of like you can never predict a market. However, like there are a lot of talks regarding to the implications of a higher interest rate, higher inflation, less disposable income, etc. So Puzhen will talk about the overview of the market, and he will also talk about the other aspect that I mentioned earlier as well. So Puzhen, I'm going to pass the stage to you.
All right, thanks, Jeff. So hello all, my name is Puzhen. So me myself, I hold a real estate broker license and practice in the field and mainly in residential for almost 8 years. So I'm very glad to be able to participate to this webinar today and share some latest info with you guys about the real estate market with you all. Yeah, thank you. So here is a Canadian market overview since August 2022. And the numbers here represents the average property sale price. And we do see that As always, Ontario and BC are still the leaders of the real estate market in Canada. Toronto with an average close to 1.1 million, and Vancouver with 1.2 millions. And after that, followed by Quebec and Alberta with an average of $500 to $530,000 in average. And on the other slides, we do see that since March, the market got really influenced by the increase of the interest rate. We do see that either the average sold price or the transactions has a significant drop overall in the Canadian market. And furthermore, about the Vancouver and Toronto market. So since they had a huge bubble in the past 2 years, and they really had like a crazy bidding era somehow. And we do see that this year in 2022, the average unit sold did drop by close to 40% average in BC and close to 30% average in Greater Toronto area. But however, this is not the same thing in Montreal. So in Montreal, as we're talking about a relatively affordable market, we didn't have that much bubble in the past years. So we're actually less sensitive to this impact. And from this chart, we do see that Montreal market has dropped only since April and slowly continue to soften after the recent increase. But again, since the pandemic hit us, it actually changed our way of living and working. And probably a lot of you have also experienced that a lot of workers have been asked to work from home, so we'll need a bigger place. And a lot of people who has previously lived with friends or families kind of decided to get their own place. So so the average number of Canadian household has dropped, meaning that we'll have eventually in the future years greater demand on the market. So quickly about the rental market, I just want to brief it quickly that it does reflect on the Montreal rental market that since June, the rental market has been highly active, and the overall proportion of the rents has also increased by a lot. And also many articles have reported that Montreal home vacancy rate hits record low. So I'll take a quick example that nowadays a average one-bedroom condo in downtown Montreal actually costs around $1,500 per month, and it's actually without taking into consideration of the hydro, the electricity, and the insurance. So instead of paying the high rent, probably a lot of you ask, is it possible to save up and purchase your own place, right? So we're gonna look into this this program of 5% down payment. So a lot of you ask, does the 5% down payment really exist, or can I get benefit from it, or even does it really apply on me? The answer to the question is yes, it does, but there's certain restriction and there's actually extra costs that come with it. So on this slides, we do see that on the pro side, about the lower down payment, we could the pro side that we put less down payment, so you'll be able to purchase early, right? And also this insurance premium that applied on the percentage will be able to pay along with your mortgage, so you don't have to pay this whole amount one shot from the beginning. But on the con side, this program does not apply on any property that is over $1 million or more, and it will require a higher down payment. And also for Quebec residents, there is a provincial sales tax that applied on it. So often for this 5% down payment, often bank look into your credit history and annual income. So those two things are most important when they approving a case. And 5% down payment would only be the lowest limit that exists on the market. But depending on your case, depending on each person, you'll be more looking into to pay in between 5% to 20% down payment instead. And anything lower than 20% will require a mortgage loan insurance from CMHC, as Jeff mentioned previously, and it ranges from 0.6% to 4.5%, depending on how much down payment you will be putting. So the more you pay, the less premium you get. Also, I think Jeff is about to mention, could you just go back to the other slides? Yeah, thanks, Julien. So yeah, so Jeff's or Julien will probably gonna talk about this, so that your payment, your down payment, could also be taken from your RRSP tax-free account, and you have up to 15 years to pay it back without any interest. So back to the topic, does 5% down payment really fit your situation? I think it is a question that you have to ask yourself, and you have to really look to it carefully and with professionals before really making a decision. And we're gonna look into the numbers. We're gonna look into the influence over the monthly payment after the rise of interest. Yeah, so here I took an example of an average property of $600,000 with 20% down payment and amortization over 30 years. So we do see that from 3% of interest rate, we're talking about something around $2,000 monthly payment per month, and slightly going up until 5% interest rate, we're talking about close to $2,500, even $2,600 per month. So by going up by 2%, we're talking about a significant difference. Is it really a bad thing for future buyers? So maybe think this way, that in 2021, so last year, during the bidding war, so in order to purchase any property close to $600,000, you probably had to pay an extra $100K when bidding with others in order to actually win the property. But this year, or even in 2023, this $100,000 could be saved, and you could definitely distribute this into your monthly mortgage. So a quick calculation that if we go with a 5% interest rate, so we're paying $500 extra per month, and times 12 months times 5 years fixed rate, we're talking about only $30,000 more over the monthly payment. So this compared to the 100K that you were about to pay, I think you do see that sometimes there's a benefit when with the higher interest rate. So basically, in my opinion, that it is a time to start thinking if you're looking forward to purchase your first house as a principal residence, and as interest rate continue to rise, there will be less qualified buyers for sure on the market. So the market will slowly shift towards buyer side. So you will have more power to decide, you will have more time to choose and to find something that really meets your criteria with a good budget, and even furthermore to negotiate the price. So as real estate plays a huge role in Canadian economic system in the past, and I think in the future as well, and the supply demand still looks in a balanced state, I definitely personally, I see a moderate growth in the long run. So I do suggest that do not afraid to look into the market even though the interest rate is rising. Before ending this, I do want to talk about this new law that recently got adopted by the government for international buyers. So starting from January 1st, 2023, there will be no longer allowed for foreign buyers to purchase any properties, either for self-living or for investment. But work permit, study permit holder, and even permanent residents are still good to go. So if you have plans to purchase anything, but you don't have a status in Canada right now, you have to think fast and react quickly. And for the moment, this law will stay for at least 2 years.
Thank you, Puzhen. Thank you for all the explanations. Very interesting. So I will take over from now. I wanted to tell everyone, like, don't hesitate to contact Puzhen if you have questions. Don't hesitate to find your own real estate broker, someone you trust to. Like it's very important, I think, to work with people we trust and to work with professionals for that kind of questions. Yeah, especially when we know that real estate brokers are, when we buy, we don't pay for them, like they are paid by the seller in that case. So on the financial level, that's something that you don't have to pay. So you should take advantage of that. After seeing like how much you should save and what will be your budget in the future when you will be homeowner, I wanted to talk about like the tools you have to prepare yourself, basically to prepare your finance and to save for that really big step that is to buy your first home. I invite you, like Jeffrey did, to watch again, or to watch for the first time if you didn't, the first 3 webinars we had with QueerTech, because it will be a little bit more precise about all that. But still, today I wanted to talk about these tools applied to that precise topic. And the first one, of course, you heard about it, we talked about it already. It's about like RRSP and the HBP, so the home buyers plan. That's, I call that the proven one because it exists since a long time now. It works, it's very good, a very good tool for you to save for first home. You can, like with the home buyers plan, you can withdraw tax-free up to $35,000. Rules apply, of course, but it's not only for the down payment. So keep that in mind. Like it's for the down payment and also other expenses that you have with your first home. So you have to do it right before or at the same time that you're buying your home. So it's very important. Why is it interesting? It's because with the RSP, you can save money pretty fast over the years, especially if you accumulated rooms since you started to work. Plus, the money you put in an RSP is deductible from your taxable income. So you have a short-term like advantage at saving money in your RSP, and then the medium-term like advantage is to use the home buyers plan to be able to buy your home faster. Keep in mind that you still have to reimburse yourself. Basically, it's your money, but you reimburse it to yourself. So no interest over 15 years. And the home buyers plan is possible with most group RSPs. So you can check that. I will talk about it a little bit later, but think about that. Think about your group RSPs. If you have good group RSPs with your employer, that could be something interesting for a first home purchase. The second one, it's completely new. The first time we talk about it because it will arrive just in 2023. So that you cannot even find it in our previous webinars because we didn't have much information before. The information has been released recently and it will start January 1st. We'll be able to open a first home saving account that will be exclusively to buy your first home. It's a bit of a mix between RSP and TFSA. The first year you will have a maximum contribution room of $8,000 in 2023, and then a new contribution room every year. And the maximum in your lifetime would be $40,000 contribution. So we talk about contribution maximum. We don't talk about the amount of money you can have in there because the money can grow, you can invest it and the money can grow tax-free. But the maximum lifetime contribution will be 40,000. What's interesting here is that it will be deductible from your taxable income. Every contribution will be deductible from your taxable income, like a RSP. But every withdrawal for like a first home purchase, of course, will be tax-free So basically, it's a pretty nice gift. Of course, there's a catch, and that's why I wrote in the end. The catch is that you cannot use it with a home buyer's plan. So we've seen like the RSP, we've seen how it works with a home buyer plan. You won't be able to use that new tool at the same time as a home buyer's plan. You cannot take money from that first home saving account and take money from the home buyer's plan at the same time. Why it's very important? It's because you have to plan it well. For some people, especially the people who already started to save in RSP, that won't be much interesting to use it for the first home saving account. But still, it's interesting to know that it's here. Interesting to talk about it with your advisor and see what would be the best for you, depending on your projects, depending on the timeline of that project, depending on if you have a group RSP and an interesting one, for example. So ask yourself all these questions and don't forget to talk about it with your financial advisor to make sure that you choose the right tool for your project. The last tool, of course, the TFSA. I say it's the one not to forget because some people tend to forget it because there's no special plan with the TFSA to buy a home, but it will be great for all the steps. So it's great for to save for your down payment. It's great to save for your first expenses. It's great to save for your future expenses, like the budget we talked about with Jeffrey. The only thing that you have to think about when you invest in a TFSA is to try to generate some gains. So ideally, it's investing during a few years, so you take less risks because you know how risky the market can be. So make sure that you invest smartly, reasonably, and it will be helpful for seriously like all the steps of home purchase. Because there's no tax when you withdraw money from a TFSA. So very interesting to organize these three tools, RSP, and TFSA, or the new first home account with the TFSA, and see how you can organize that to make the best out of it. Now, a few very important advice to save money for that precise project, that is to buy your first home. First, know your budget, know your base expenses. Like, you may have to plan some cuts if you want to save faster for that goal, but be careful with what I call the extreme financial diet. People that are just saving for that and saving a lot and making a lot of cuts, that won't do the deal. Like, you will at some point that won't be like, that will be hard in your daily life to make that many cuts just to buy a home. So make sure you organize your budget well, so it's good but not too hard on yourself. And don't forget to save for your other saving goals. Buying a home is not your only goal. You may have like a short-term goal, medium-term goals, long-term goals like retirement, etc. Make sure that you still organize all of these and that it's realistic. So that's my second advice, like your goals and what you want as a first home. Try to be as realistic as possible. Talk with a financial advisor, talk with a real estate broker, see what you can afford. And on a saving point of view, I always say it's better to be safe than sorry, meaning that, for example, you need 100K in 5 years, just save $1,700 per month, and you're sure that you will have the money in 5 years. If you invest it and then you make money with your investment, then maybe you will have the money a little bit sooner, but don't like bet on that. It's better to organize yourself like realistically, and then if you make money by investing, you make money by investing. That's a plus. Don't forget your group RSP, as I was saying before. Check with your employer. Does the employer matches the contribution? If yes, try to maximize it because it's free money. There's nothing better than that. Usually, like, you can double sometimes your group RSP contributions just by enrolling to that group RSP. You can also talk with your financial advisor, because at some point, if you have more than $35,000 in your RSPs, like personal or group RSPs, maybe it's interesting to rethink your strategy, save more in your TFSA, etc. Like, think about all that. Last advice, extremely important, be careful with your investments. I've seen too many people not being careful enough, and then your investment goes down, and that's the time you need the money to buy a house, and nobody's happy. So our advice, if your goal is to buy a house in a short term, like let's say 1 to 2 years, it may not be the best thing to invest on the market. There are other solutions, especially these days with the interest rate that are rising. You have a guaranteed investment certificate. You have some kind of mutual funds that are giving you like that cannot lose money, basically. So ask your financial advisor, again, make sure that you make good choices and that you don't take too much risk for a project that is coming really soon. You know, like, you don't want to lose that money. Okay, so make sure that you organize yourself properly. Now, that was about the savings, but it's not only about like the money you save. It's also like about how to protect yourself, protect your finances, protect your family now and in the future. And that's also part of your finances. First thing, your home emergency fund. So Jeffrey talked about it earlier. Actually, it's very important to talk about it again, because so many people don't have that. So many people put all their money in their first home, and then they have no cash. And when there is a problem with the house, they have nothing. They cannot afford it, and sometimes they have to take more credit, etc. That's really not good when you are just starting, when you just have your first home. So make sure that you have an account with easy to access cash, something that you put money every month in it and you make it grow, so you know that if there is a problem, when I say a problem, it's really an emergency, like something that is not even covered by an insurance, for example, at least you have cash to pay for these reparation, like renovation, whatever, like something very important for your home. Especially if you have a house, like a detached house, it's even more important, because when you have a condo, usually you have condo fees, and within the condo fees, you have that contingency fund, basically like an emergency fund too, but for the whole building, for the whole condo. So you already, through your condo fees, like saving a little bit of money for in case of an emergency, but still think about like saving money for yourself and having that emergency fund. You will be happy to have that if something happened. Also, of course, like the second no-brainer for me, it's the home insurance. Like, just get your home insurance. It could be like a few dollars, like a few $100s a year sometimes, but it protects your home, protects your belongings, and especially protects your finances. Like, if something happened, like last example with all the storms we had this summer, etc., like water, fire, etc., something can happen. You want to be covered, especially if you don't have a lot of money, a lot of emergency fund, like we just talked about. You want an insurance, and anyway, it's required most of the time if you have a condo, and for me that's a no-brainer. Just get a home insurance. That can happen, like something can happen every day. Sorry, seriously, like that's very important. And talking about insurance, there's other kinds of insurance, of course, but more like like insurance for the persons, personal insurance. Make sure that you review that plan. Some of you may already have insurances, life insurance, health insurance, etc., disability insurance, but it's important to ask yourself the good questions and make sure that you adapt that insurance plan to your new project, that is to buy your first home. So for example, in case of premature death, like who would have to pay the mortgage? Is it your spouse? Is it your family? Is it a brother, a father, etc.? So you have to know that, you have to understand what would happen and make sure you're protecting your family thanks to a life insurance. Maybe you already have a life insurance, maybe you have life insurance at work. Still, like, review all that. You can even talk to an advisor like us. Like, we'll be happy to just talk with you and see where are the needs. And it's not only about life insurance, it's also just about like sickness and injury. If you get sick or injured, like, will you be still getting an income? And if yes, or if not, like, how will you pay for your mortgage? How will you pay for your basic expenses? So that's all these kind of question that you have to ask and make sure that you're ready for it when you buy your first home. Like, we've seen too many people like having to sell their home super fast because there was a death in the family, for example. So make sure that you're prepared for that. And finally, we don't talk about that often because it's never a topic that we like to talk about, but you should definitely think about it. My advice is to talk about it with the notary when you sign for your first home. Talk about it with the notary because they can do that at the same time as buying the property. So it's about writing your will and writing the protection mandate. About the will, that can sound funny, but that is not. Like, when that happens, like, even if you're married and you don't have a will, you're not deciding. The government will decide. And in Quebec, for example, 2/3 of the succession would go with to your spouse, but the rest, 1/3, would, for example, go to your parents and your mother if she's still alive. So I always say, like, if you die and you have a house and you have no kids, and for example, your mother is still alive, in Quebec, your spouse and your mother will end up being co-owners. So I hope they get along together, because that will have, there will be no choice. They will have to get along together and make sure that they deal with maybe selling the house, maybe like the spouse will have to buy your mother's shares, etc. That sounds very complicated. So just write a will. It's a few $100s with a notary. You can even, in Quebec at least, write it yourself. There are other means to do it. So don't hesitate to ask again, and make sure you do the right thing to protect your family and to protect your loved ones. The protection mandates, same idea, very important, but it's in case of your incapacity. So if you cannot make decision anymore because of an injury, because of sickness, etc., you will decide who will make decisions, important decisions and financial decisions for you. So that's the same. You can do it at the same time as the will. Extremely important. We don't think about it enough, and too many people forget about that, and then like the whole family is in trouble after. So make sure that you decide all the time until the end. So that's it. That will be our last advice for today.
Thanks, Julien. Thanks, Puzhen. Hopefully, this presentation is giving you a little bit more confidence in terms of the home purchase process. We really try to dissect it from different, to talk about it from different angles. But however, it's important to acknowledge that knowing the information is just half the battle. I think it's very important for you to have a plan to actually get it done. So actually, like, part of the job for an advisor is to actually monitor you to make sure that it can be done. So feel free to reach out. So the easiest way to talk to me and Julien is just to send us an email. We also have the Calendly link that is available on the QueerTech website. If you want to book a call with us, like a Zoom call or regular call, depending on your preference, we'll be more than happy to listen to you and to give you some advice. And for Puzhen, like he is, like he said, like he not only does the buy sell, but also he represent buy like the renters as well. So if you're not ready to buy your first home and you want to look at options, feel free to contact him. Like he will we trust he will definitely do a good job like for helping your needs. So we encourage to stay because we still have like for 10 minutes of time, and we can have a like more intimate conversation to answer your questions and such.